In this video, we're going to talk about the real estate market versus the stock market. Which one is best? Which one should you invest in? So let's get started. Right, so let's look at the real estate market first. We know that it's a tangible asset, right? Everybody loves a property. And when I'm thinking about single family is what I typically am thinking about. I'm not going into commercial. I'm not going into big apartments. This is for somebody who's just looking to get started in real estate investing. So typically, these people start with single-family residential. It could be a duplex, quad, whatever, or just single-family. But you generate rental income, which should generate cash flow, and it appreciates in value. This is the great thing about real estate is a lot of people use real estate to supplement their income, to earn more income on a monthly basis. So that's what we love about real estate. Plus, it just appreciates, right? Well, what about the stock market? What do we love about the stock market? Well, you're buying shares in a company, right? So you're buying a part of the company. Let's just think a Walmart or an Apple or Google, some really well-established company, and you're going to earn as it appreciates. The value of this goes up and up and up. Also, if the company has dividends, you earn dividends, so you can earn income that way as well. So, how do we make money in real estate? Let's just look at this. Here we know that it is income from rent, right? So when you have a real estate, a piece of property, and you've done a great job of rehabbing it and putting it on the market, you should be able to find a great resident who's going to pay you every single month. Now, this is the primary way you're earning income, is just this rent is more than your expenses. So we want to talk about cash flow. This is what cash flow, it's rental income minus all the expenses. So what are the expenses? Well, you've got a mortgage more than likely. You may have repairs, you've got insurance, you have taxes. These are things that you have to consider when you're buying rental property is how much am I bringing in, and then how much is going out the door to pay all these other expenses, right? So that's really important. Also, what a lot of people like to look at is cash on cash return, which is how much money I put into the property, whether that be in repairs, initially in repairs, or maybe it's a down payment. How much money is that earning me? What kind of return am I getting on that? That's called cash on cash return. We won't go into that right now, but just know that cash flow is a big one. Next is appreciation. We've already mentioned this. Appreciation is huge depending on what type of property you're buying and where you're buying it. There are some areas that may be maybe have a little bit higher cash flow, but they don't get a lot of appreciation because they're mainly rental parts of town. And so you may get rental appreciation, but you don't get a tremendous amount of appreciation of the property like maybe you would in an A class or a B class neighborhood. Now, A class is your top tier neighborhood in a city. B class is upper middle class neighborhood in a city, and then C class is like working class. So if you have a C class property, it may not appreciate as much as an A class, but you still get appreciation. So this can be appreciation of the property or appreciation of the rent. As it grows, you grow that income. And then you also get tax benefits, right? So you get some depreciation, but you also get to write off interest that you paid as you're paying that mortgage. So there are tax benefits to owning real estate. This is why people love real estate. But we're also going to talk a little bit later about what are the challenges with real estate. Now, what about the stock market? Well, everybody knows the stock market is, it's really an appreciation play for that particular company that you're buying. So if I'm buying Walmart, as you see here are these charts. This is Walmart right here. You see this going up. Let me change my color here, right? Over time, this is what you want to see. This is right. This could be over the past 20 years, 20 plus years that this stock price has gone up. Now, have there been hiccups? Yeah, I see a big hiccup right there. I see some hiccups right here around COVID. There's all kind of like stagnation right here. Wow, the stock didn't do too much, but it still was a good investment. Even 20, 25 years ago, this has been a great investment. Not only, and then on this chart, you see each year how it's gone up, appreciated, but then you know what? Some years have had down years. Some years have not been great. And This is a part of owning stock. Sometimes you just have to let it grow, leave it in there. You don't want to be a day trader necessarily. You want to just let the stock sit there and grow. So you get appreciation, which is what we mentioned here, but then you also get dividends on some of these stocks. So Walmart has paid a dividend forever. Walmart pays a dividend to its shareholders. Now, most people, when they get that dividend, they're reinvesting it back into the stock. Sometimes you'll get a check, whatever the case is. But dividends and appreciation are how people make money in the stock market. Now, this is a much different than owning real estate. But I will say, and I will just say that most of the people that I know, usually when they're younger, they're starting off with stocks and mutual funds, right? So a mutual fund is a group of stocks. It's a fund manager who's buying these stocks for you, these companies, and you're paying that fund manager through the mutual fund. So most people start out that way, and then when they earn enough income, they start looking, well, I want to buy some real estate. So that's what I've seen. So let's compare the risk and the effort. Now, this is the big one right here. I love real estate. I've been doing real estate for the past 20 plus years, and real estate is a fantastic investment. I will say I think you have opportunity for a higher return, but it does require more work. There is more work. There's not really a true passive real estate investment when you're talking about buying single family residential or duplex or quad or whatever. Even if you have a property manager, there are things you have to make decisions about. There's going to be things that happen with the resident. There's going to be things that happen with the property. You're going to constantly need to be making decisions on this property. And it's not just a completely passive mailbox money type of thing. So I think I love real estate, but it does require more work. Versus the stock market, you may average around 8 to 12% over a long period of time, and you don't have a ton of work to do, especially if you're buying a group of stocks in a mutual fund like I mentioned before. Now, back before I did real estate, I was a financial advisor, so I was helping people think through stocks and mutual funds and individual stock portfolios, building stock portfolios. If you're buying individual stocks, it takes a little bit more understanding, unless you're somebody like Warren Buffett who just wants to buy a solid company and hold on to it forever. Actually, my dad does this with Apple. He buys Apple, he holds on to it, and if it goes down, he buys it more and more. I actually had a friend in college, and her father bought Citigroup. Now, if you saw the Citigroup stock chart, it went so high. He just kept buying Citigroup. That's all he had. It paid a massive dividend in a period of time. But then in 2008, when the financial crisis hit, it got hammered, but he didn't care. He still kept buying Citigroup, and he still owns Citigroup today. That's how much he believed in it. He had some other real estate, but he really was a stock investor, and that's all he cared about. So look at the risk, look at the reward, look at the effort that it takes to buy real estate versus buying a stock, and then you need to determine, hey, which one do I want to do? Do I want to be more hands-off? I don't want to have to be making decisions on a weekly or a monthly basis? Then maybe the stock market's for you. So which is better for you? Although real estate tends to outperform, it again has more involvement. Stocks offer ease and flexibility, especially for long-term passive investors. I'm going to say right here, mutual funds. If you really want a hands-off passive thing, then you find, as a matter of fact, I was just helping my son. He just got into the workforce, has a brand new job, just out of college, setting up his 401k, and we were talking about stocks that he should be buying, and we were just talking about mutual funds. Like, just choose a good growth mutual fund. You're young, you're 22 years old, and just start investing in that on a monthly basis. I said, don't pay attention to what the market's doing. Just keep adding money to that. It's called dollar cost averaging. You're going to buy some at the height, you're going to buy some low, and it's going to average out overall. For him, this is perfect. He is a busy young professional and he doesn't have time to go and look at real estate. I'm just like, do this. Diversify. Again, you can do this with mutual funds, or if you're going to do it with properties, you can do this with multiple properties, right? If you typically, I'm sorry for my handwriting there. You typically do not want to buy one rental property and then say, I'm done. I'm a real estate investor. One rental property, what we always say, is not really going to do too much for you. You're going to have probably more headache than it's worth. If you're going to buy one, look to over time buy 5 to 10 to 15 to 20. Like you should be, if you're buying a single family residential property, you need to be looking at buying multiple. A lot of what we see are people that buy a portfolio just over time. They build up their portfolio and then they may sell the portfolio maybe to a fund or maybe to another investor, and then they go and they 1031 exchange that into an apartment complex, small multifamily units, whatever the case is. But that's also a form of diversification. If you're going to buy real estate, buy multiple properties. And that way, when a resident leaves, doesn't renew the lease, you're not stuck with one property and no income. Because you have multiple properties, you have income coming in. All right. And then ultimately, you want to consider your long-term goals. Listen, I know that a lot of people think real estate investing is, really cool, and it is really cool, but don't do it just for that. Just consider what are your long-term goals. Again, what we see people when they're maxing out their 401k, when they feel like they have enough invested in the stock market, they start to look other places, and real estate just seems to be a very natural place for people to look. So really, this is it. Which one is better for you? Do you want a very passive hands-off experience? Stock market may be for you. If you want to be more involved and grow a rental portfolio and think about replacing your income, this is what people a lot of times get into real estate for, then that's probably the one for you. Now, if we can ever help you, we have agents that buy properties for investors. They're investor-friendly agents. Don't hesitate to reach out. We have free rental reports. We have calculators that you can use to determine, hey, is this rental real estate property, is it worth it? Is it worth looking at, worth making an offer on? Use any of our free tools. Use any of our people if we can help you. And then if you like the video, subscribe to the channel, and we'll be coming back with more videos just like this for real estate investors.